So, good afternoon. We've established it's not the morning, and welcome to this Q&A on the budget 2021. So, my name is Amy Lishman. I'm the Head of Member Engagement at Brighton Chamber, and I'm going to be your host for today. These Q&As are brought to you in collaboration with the Coast to Capital Growth Hub. The Growth Hub provide fully funded advice, signposting and support in Greater Brighton, West Sussex, East Surrey and Croydon, and they help small businesses and medium-sized enterprises to address their business challenges and help them grow. They're doing a lot of work on EU transition, not called Brexit, EU transition at the moment, so there's so much support out there. So what we'll do is we will send around their contact details afterwards so that you can get in touch with them if you need any support or advice for your business at this time. I'm delighted to be here with Mark Horsfield, Business Services Manager at Plus Accounting today. Thank you so much for joining us, Mark, and soon to be sharing all your wisdom and expertise to do with the latest announcements from Rishi. So Mark, as I say, is Business Services Manager at Plus Accounting, and Plus Accounting is a firm of accountants and business and tax advisors covering Brighton, Hove and East Sussex. They're very active members in the Chamber and we're always delighted to do a Q&A with them. So I'm going to be asking Mark some prepared questions in advance as he talks us through some of the biggest budget announcements that were made last week and what they mean in principle for businesses. So I've mentioned that there is a chance for you to ask questions throughout this session on the chat, so please feel free to do that. And if we're unable to answer any of the questions on the call today, because Mark is an expert and he does really know his stuff, but sometimes there is a question that we might need to go back and get an answer for you on, and we will do that. We'll get an answer for you and come back to you on email. So let's get started. Welcome, Mark. Thank you for joining us. So the first question to you, I mean, coronavirus clearly was a driving factor between a lot of the biggest budget announcements this year. Can you share, perhaps, start us off by talking a bit more about the extension to furlough and the business restart scheme? They were some of the headline support that was offered. So Mark, over to you. Tell us about those.
Yeah, thanks, Amy. Good afternoon, everyone. Hope you're all well. Yeah, so this budget has been sort of focused on a recovery from the lockdown that we've been in, and also with a slight view to paying for the recovery and such. So, as I mentioned, with the furlough scheme, it has been extended. So that's great news for those who are on it. I think the last recorded figures, there was still 5.7 million people on furlough, so it's still widely being used, and a large portion of that is on the hospitality and hotel sectors, so it's still being used vividly. So it was due to end at the end of April. It's now been extended to September, so it's very much similar as it was before. So it's 80% claim of an average wage for the month, like it was when it was supposed to finish around October time last year. The government contributions start to lower as for each month. So for July, the government will contribute 70%, so it's up to the employer to contribute the remaining 10%. The employee should always still receive the 80% they're due. Sometimes employers top up to 100%. It's very much dependent on the employer themselves. And then for August and September, that will drop down to 60% for the government and then 20% for the employer. So they are been extended for those. And also there's been available for the business support grant. So again, similar to what has been provided before with from local authorities and local councils, they will provide a grant to cover basically lost earnings. So the scheme has been extended for that as well, which is going to run till September. It's going to target sort of the most badly affected businesses. So it's going to be the retail businesses and hospitality businesses. So for non-essential retail, they will get due a grant of up to £6,000. Again, it will be dependent on the business rates, vatable rates of the sites in which you have. And then for the sort of hospitality sectors, it could be a grant of up to £18,000. So hopefully that will help cover those businesses in the interim period as and when we start to move towards more normality. Obviously, with the government plans, looking around sort of June mark where we can sort of open up with minimal restrictions. So that grant money there is to sort of cover that period from now until June to keep them going. And hopefully those two schemes with the furlough and the business grants can keep as many retail businesses open as possible and other businesses as well, and keep that going. Say local council should, under their discretion, who they pay out to. So if you have previously received it, you're likely to be eligible for the new one as well.
Fantastic, thank you so much, Mark. On that and looking at how Brighton and Hove Council, I know perhaps that covers a broader area attendees today, but we've been kind of getting regular updates from Brighton Council about the application process for some of these grants. So we can send some information on that, and it's likely there's always a bit of a time lag though, isn't there, Mark, between government announcements and what local authorities can actually do, because they often get the announcement at the same time.
Yes, they often do, and say it does take a bit of time to get it sent out, but hopefully you start hearing for it in the next couple of months, and they'll advise when you can receive it, so hopefully it won't be too long.
Thank you. So one of the announcements was around a new recovery loan scheme. So we've seen similar things like this over the last year, but can you tell us a little bit about what this new scheme is? Does it differ from things that have been announced before? Does it replace it?
Yeah, it's sort of a replacement for the coronavirus interruption loan. There was two loans usually available for businesses in the last year, so the bounce back loan and this interruption loan. A lot of smaller businesses were able to take advantage of the bounce back loan, and from experience of what I've heard from clients who have taken it up, it was a lot simpler and easier process. Often applications were processed within 24 hours, and then they could get a loan up to £50,000, and again, it was favourable returns on that. The coronavirus interruption loan was a bit more complex. It was still government backed, but not as advantageous as the bounce back loan. There were still credit checks on the business who were making the application for the loan, and it was a much more challenging sort of application process to get the funding you needed. So this recovery loan scheme is a sort of extension of that interruption loan. It's going to be government backed by 80%, will be backed by the government. And it's loans from between 25,000 and up to 10 million. So if you have previously taken either a bounce back loan or an interruption loan, this still will be open to you. So you can still make an application. The downside of it is if you have had a previous loan, trying to make an application for a new loan, they might then limit the amount of loan you could take under the new scheme. The bounce back loan was great because the interest was covered by the government for the first year. But for this new loan scheme, like it was with the interruption loan scheme, all loan fees and interest are payable by the business taking out the loan straight away. So there's no sort of advantage in that regard. It's not, unfortunately, not an extension of the bounce back loan. It's very much sort of to help sort of with this period to sort of grow the business. So there's likely to be stern credit checks, and it's very dependent on the provider who you're making the application to. So their checks will vary from provider to provider. So we wait to see how many uptake of that loan scheme is. But if your business needs that extra support, extra funding available, then this loan scheme might be an option for you rather than a normal high street loan application.
Yeah, so there's nothing, you're saying there's nothing to stop somebody who has got the bounce back loan that's kind of sorted. There's nothing stopping them apply for this one, but there may be restrictions on what they can get.
Yeah, absolutely. They'll be eligible for it, but when they do their sort of credits and determine the sort of amount of loan they'll be willing to lend you, they will take into account your outstanding liabilities that you have. So they will look at the bounce back loan, and if you have any other loans, like a normal credit check will do, the application, they may restrict it or even deny it based on how your business is, the forecast for the business, how profitable it was before lockdown, and your forecast for going forward the next 12 months or 3 years or whatever it is. They may sort of impact your application there. So, but you still, if you get refused by one provider, you can always try another one if you're determined that you need a loan to help grow your business or to maintain it. There has been some announced, but they haven't announced the full list of accredited providers, but that should be released in due course.
That was going to be my next question, Mark, about, is it just your bank that you have to kind of go with, or whether you can go?
I think sometimes when you go for your bank, it's because they've got their credit history of your business. They're much more likely to provide the funding, especially when all sorts of loan applications. If you go to someone who doesn't have that history of you, the terms are a lot worse. But so certainly try the provider you're with. But if you can't get it with the provider you're with, there will be other providers who will offer, but there's no guarantee that they'll accept the loan, because they will use their normal checks to either approve or reject the loan. So unfortunately, it's not like the bounce back loan, which seemed to be approved very easily. These ones will be much more stricter to get the application accepted.
Yeah, thanks so much. So on the call today, I know we have got a number of hospitality businesses. So there were some announcements in the budget about changes for those in the hospitality sector. Could you run through some of those? What the biggest kind of, benefits, let's say, for businesses in that sector at the moment?
Yeah, so obviously that's a sector that's been hugely impacted. Obviously, I've mentioned the grant money that hopefully will be received by the local councils. There's also a VAT reduction that those hospitality businesses have been receiving, and luckily that's been extended. So it had been reduced from 20% to 5%, and that extension has gone to the end of September. And then after September, they're not straight going back to 20%, they'll go to 12.5%, and that's expected to be coming in till the end of March. So good news for those businesses if they can sort of reduce their VAT bill. Either they pass on the savings to their customers to try and get more business, or if they keep the prices the same, they'll increase their sort of margin just by that. So that's something that's been brought in to help the hospitality sectors, the VAT reductions. There's also business rates holidays, which have been used in last year. That again has been extended until June, and then after June there will be a further reduction there. I believe it's 66% reduction for the next until the end of March 22. So again, business rates also is expected to be either reduced and then sort of delayed further. So that's helpful for the hospitality businesses there.
This is probably an unfair question because it's quite a broad one, but on that business rates holiday, obviously there's been a lot of talk about how much reform needs to happen for businesses on the high street to remain viable. Is there any kind of murmurings about what might happen with business rates? Is there any changes on the horizon, or is it just it's here to stay as the way of getting money, I guess, for companies?
Yeah, I think they've always looked at it, and they've always tried to stop small businesses being under the business rates. They have at times allowed a sort of threshold for small businesses, but at the moment they're still going to keep the business rates. As far as I know, there's not really been that much discussion of reform with that area. They're sort of targeting other areas, I believe. So business rates certainly for the short term will continue. We'll wait to see this time next year if there is any changes to the business rates. Obviously with the retail business, you go on the high street, there's so many vacant lots everywhere. I think it's only natural that they'll have to consider the business rates issue, because obviously with more people working from home as well, it means less people going to a coffee shop and all those sorts of issues. So, certainly I think once it gets towards the end of lockdown and the business and the retail businesses are more at full scale, they still might get reduced just purely because the workforce has adapted. It's now not everyone's going into an office. They're now part-time from home, part-time in the office, which obviously has a big impact on the high street. And so they've got to try and the growing market of Amazon, obviously they've been booming with lockdown. Everyone orders now, and I'm not here to knock Amazon. I order it from all the time, but it obviously has a direct impact on those retail shops, especially if you're an independent retailer trying to maintain a living whilst competing with those global organisations is always tough. So I wouldn't be surprised if in the future the business rates does look to make it more appealing to have a presence on the high street, but we wait to see on that.
Thank you very much. Thanks for dealing with my unfair question. Can you talk us through the changes to corporation tax and the minimum wage increase as well?
Yeah, so for limited companies, one of the biggest shocks from the budget was an increase in the corporation tax. So especially considering this time last year, it was expected to go down to 17%. Now they've imposed an increase to 25% for larger businesses, so with profits above 250,000. Now there's still going to be a small profit threshold for smaller companies, so profits up to 50,000 will still be at 90%, which is good news. And their estimates was around about 70% of businesses will fall into that category. So hopefully that means still a lot of businesses won't get an increase in tax. But there will be those who are sort of below 250 but above 50. There will be a sort of tapered rate, a marginal rate that will be applied. So we wait to see what, actually they haven't announced yet what that percentage will work out as. Usually they charge it at a full 25%, but they taper it back so it actually reduces the percentage. So if you're in that sort of profit region of between 50 and 250,000, you won't be paying 25%, but you might be paying a rate slightly less, maybe 21, 22, 23, something along those lines. So we wait for full guidance on that. One thing that's sort of associated with the corporation tax was the announcement of a new super deduction for capital allowances on plant and machinery. So this plant and machinery is assets you buy for the business to be used. So computer equipment, machinery, those sorts of things there. Usually they're more bulky purchases, not sort of something you buy, just a bit of stationery or something like that, and it's a small amount. These are sort of bigger purchases that are used in the business to try and obviously help the business, boost its trade and all sorts. So there's been an extra increase in the allowance against what you claim for. So normally you would buy a piece of equipment and you claim annual investment allowance. So you get 100% of the cost deducted against your profits for corporation tax. So what they're proposing is additional 30%. So that's 100% turns into 130%. So if you say, for example, you had a computer equipment for £1,000 and you would deduct that from your profits, there's that extra 30% means you're now deducting 1,300 rather than the 1,000. So you get the corporation tax saving for that. That's going to be coming in next month in April and should be around for 2 years. So if you are business planning to make purchases either in the short term or longer term, especially if you buy machinery, look to try and do that before this scheme expires, because you could get a saving on your corporation tax there. So that's something to keep in mind. We still wait the full guidelines again of what would be your qualifying plant and machinery asset. Presumably, I still think vans, if you're a tradesperson, vans should qualify, but we wait to see if there's any assets they're not allowing for the claim. But that's something to be aware of also. And with the minimum wage, again, that's going to be going up to £8.91 per hour. So if you do have employees on minimum wage, then that's the increase that they'll be getting from April. And I believe now it's gone down to over 23s, when previously they were slightly older that rate was applied to. So they've reduced the age in which that minimum rate has gone down to. So it might sort of impact those sort of 23, 24-year-olds who used to be looking for employment, who then used to be cheaper than, say, a 25, 26-year-old. They're now within the same wage bracket. So wait and see if there's any impact on that. But if you do own employees on the minimum wage, then you have to be aware of the increase from April.
Thanks, Mark. Got questions come through from the chat, and so we've talked a lot about hospitality benefiting, there's grants available. Is there anything that you've seen that really benefits smaller startups that maybe aren't in profit right now? Is there anything in the budget that you think, yeah, that's really going to support them and help them?
Unfortunately not. I don't think there's anything targeting sort of brand new startups. There are some schemes, initiatives to help training and grow a business, which might be applicable. I think there's a help to grow scheme. There's either a digital version or a management version. There's sort of training schemes to try and, what for the management one, it's sort of a mentoring scenario where you coupled together with a business school, and they help provide training to sort of grow your business, especially if you're a new startup. That might be something you could look into further. It's a help to grow scheme, and it's government backed, so they cover about 95% of the training costs associated with group it together with a business school to get training to help grow the business that you're looking for. So if you're, if you are a new startup and you've not been trading for too long but looking to grow a business, initiative like that might be something you can look into. There's also a digital one which is used for a digital scheme to try and sort of improve productivity. And again, it's a government backed, and it's any sort of software which is again supposed to, they should be providing a list at some point of approved software. So if you pay for a software to improve your business, improve productivity, the government will do a backing of 50% of that. Again, there's various restrictions associated with that. So potentially there might be those schemes, but if you're a very, very brand new startup, I think the loan schemes, obviously they'll look at credit histories, so that's probably not viable. A furlough scheme is probably not viable either. So yeah, I can't think there's too much else in the way of support for a brand new startup.
Thanks, Mark. On those couple of schemes you did mention, where can we share the details of those schemes afterwards? Can we find them in?
Yeah, there's certainly a link on the government website. I certainly can find the link and provide more details of of the criteria to meet those schemes. So if you were interested in finding more, it will detail the criteria of how you can be eligible for it. I think the applications are supposed to open later this year, sort of June, July time. So there'll be a link I can provide.
There's always that time lag, isn't there?
Yes.
There are a number of local business support schemes as well, some that are doing match funding. So what we can do as well after this session and in the follow-up email, we'll include some links to funding and opportunities that can help startups, because there is a lot of support, I think, locally going on at the moment, and through the local enterprise partnership, through the Growth Hub, who we're doing these Q&As through. So we'll send some local schemes through as well. I've got a couple of questions that have come through about corporation tax. So one of them is about tax bands. Is the tax band based on gross profit, i.e. before dividends? This company takes most of their pay through dividends, so gross profits would take the pay.
Sorry, my internet was a bit fake.
No problem at all. It gives me a chance to probably perfect what I just said, because there's lots of lots of aspects. So this question is about corporate tax bands.
Yeah.
So is the tax band based on gross profits i.e. before dividends? This company takes most of their pay through dividends, so gross profits would take them over 50k.
Yeah, so it will be based on gross profits before dividends, because dividends doesn't get deducted when you're determining your corporation tax. So it'll be based on your taxable profit. So it will be your gross profit minus any capital allowances that you've made, and then it will be based on that. So dividends won't come into effect for that.
I've got another question, and this has got quite a few figures in it, so we might have to, I'll talk slowly. So with the tapered rate for profit between 50 to 250k, if profits exceed 250k, will only the profits above that 250 be charged at 25%, with profits between 50 and 250 being on the tapered rate? Will all profits be charged at 25%?
I believe it's expected that any profits over 250,000 should be at the higher rate, I believe.
Okay.
Wait sort of full confirmation of that, but I believe it'll be profits up to 250k will be on the tapered rate, and then any profits over that will be taxed at the higher rate. So it shouldn't mean that all your profits are taxed at the higher rate, but potentially a proportion will be very much similar to sort of income tax rates, where you get the basic rate and then you only start paying a higher rate of tax once you for income received over that. I believe it's likely to be that sort of scenario.
Yeah. Thank you very much. No questions on the chat at this stage, so I'm going to go on to our next prepared question. Moving on now to look at self-employed and personal tax implications. What were the headlines in this area?
Yeah, so the main one for them was the additional grants that self-employed people will receive. I think on the whole, self-employed people, with the support relief that has been issued by the government, have been one of the best groups to receive help for. Certainly many of our clients are in sort of director shareholders of their businesses, and often take, as someone mentioned, take a lot of money through dividends, and then often have a small salary. So they often missed out on the relief claims, whereas self-employed people were receiving a grant based on their average 3 monthly profits and getting 80%, similar to sort of furlough scheme, but they'll get a grant up to £7,500. So they've announced there'll be a fourth and fifth grant available. The fourth grant should be received towards the end of April. HMRC should be notifying those who should be eligible around about mid-April. The good thing about the fourth one is if you were newly self-employed and you submitted a 1920 tax return, you probably found that you weren't eligible for the first 3 claims that were available for self-employed people. So this fourth one, you will now be eligible. So if you were newly self-employed and you did submit a tax return for that year, you should, and you have sort of suffered a decline in trade as a result, hopefully that you should then be eligible for this fourth claim and potentially a fifth one as well. That's on the basis that you submitted your tax return before 2nd of March. Obviously, there was an extension on submitting tax returns to the end of February. So hopefully, if you are in that scenario, then you did submit your tax return. And then if you have suffered as a result, then hopefully this fourth grant will come to you. This fifth grant is supposed to be covering sort of the May to September period. It'll be slightly different in that the amount you receive will be dependent on the sort of drop in turnover that you have. So if you've received a drop in turnover of over 30%, you should still get the 80% grant available up to £7,500. If you've only suffered a smaller turnover decrease of less than 30%, you should get a grant of up to 30%. So that grant, obviously, there'll be more information come out on what they determine for the drop in turnover, what basis they use, but you'll likely have to apply for that using calculations based on your sort of impact on your turnover for that fifth grant, which will be due, you should receive sort of later this year at some point. I think there's anything else. No, that's the main real headline for sort of self-employed people there.
Yeah. And can you talk us through some of the personal tax threshold changes? Yeah,
so there's been a slight increase in the personal allowance of £70. It's obviously not life-changing amounts. If you are one of those who's on a director shareholder company and you take the minimum salary, that means you'll get a massive increase in your salary of £4 per month. So it's not great news for that regard. And also the basic rate threshold has increased by £270. So you can earn an income up to £50,270 and be taxed at the basic rate there. They have announced that those rates have been frozen for the next 4 years up until the 2025-26 tax year. So obviously that's sort of bad news in that regard, because if you're an employee or you take your profits and you grow your business and looking to take more out, you then might be pushed into the higher rate tax threshold on the basis that obviously inflation-wise, your costs are going to go up, living from home. So you might need more income, or your employer pays you a bit more. So you might be eventually, by the threshold being frozen, be pushed into the sort of higher rate threshold there. It's sort of the government's sneaky way of trying to get more tax out by not giving you anything extra, but also proclaiming that they've not increased taxes, when actually the net effect of it will be that you end up with less take-home pay because you're pushed into a higher rate of tax and still have higher expenses to pay. So yeah, unfortunately that's...
But not breaking the manifesto promise.
But not breaking the manifesto. So.
Brilliant. So just before we come to the final question, I've got one which is around, was there anything else mentioned that that may have an impact on businesses? I know there was changes to the stamp duty and things like that. So do you want to run through some of the other headlines that could have an impact on our lives, let's say, not just business?
Yeah, absolutely. I mean, there's various other things out there. I think to pick on a few of them. So stamp duty holiday has been in place for a little while now, and they have extended that further. So if you are in the process of selling a house, if you're selling a house up to £500,000, you face no stamp duty, and that's been extended by a further 3 months to the end of June. So if you are in the process of either trying to sell or in currently looking to sell, if you can try and wrap that up before the end of June, you'll face no stamp duty there. So that's a helpful extension there. Obviously, they've looking to get more schemes out for Help to Buy as well, in terms of like sort of 95% mortgages for first-time buyers. So if you have children or anything like that who are looking to take advantage of that, that scheme should still be available. Again, more details will come out of that. For VAT, if you're a business who's registered for VAT, you may already be signed up to Making Tax Digital, which meant you had to have a digital software to file your VAT returns. Now, if you're a business who was VAT registered but didn't have to sign up for Making Tax Digital because you're below the £85,000 VAT threshold, you'll be obligated to sign up for Making Tax Digital from, I believe, April next year. So they're going to push every business onto this Making Tax Digital scheme because they found it worked well for many of the businesses who had used it, and so are now looking to push all the other businesses who previously had filed it the old way and push them onto this new software scheme that's been in a couple of years now. So that's one thing that they're looking to do. And I don't think there's particularly anything else I need to mention. Obviously, I've said about the growth schemes that are available, and yeah, generally a lot of this sort of tax brackets, lifetime limits for pension contributions have been frozen, and inheritance tax rates have been frozen as well. So there's lots of thresholds being frozen. The VAT threshold stays at 85. So if your business is growing, you might be pushed onto the VAT scheme just purely because the threshold is going to stay put. Again, it's a sneaky way of getting more money out of people through that way. But yeah, a lot of frozen thresholds, unfortunately, for this budget. And we wait to see if they do look to improve later on.
Mm-hmm. Well, that leads me very nicely on to my final question, and then there are a couple of questions I've said I'll come back to on the chat. So we were talking at the start of this call about how it seems like it was very much a budget that was treading lightly, while we come out of lockdown. So what's your opinion, Mark, on what might be on the horizon next? What changes might we see in the next year, next year's budget? Yeah,
so obviously there has been various rumours around about what they'll be looking to do. Obviously, the main one that they changed obviously was corporation tax, and they have stuck with a manifesto pledge of not raising taxes on the big three. So sort of the personal allowances, the income tax thresholds and VAT thresholds, they sort of stayed the same. Potentially they'll be looking to target other areas. So capital gains tax is one which could be highlighted. So there have been previous discussions about aligning the capital tax rates with the income tax rates, because the capital gains ones are taxed slightly lower rates. For private property or residential property, it was 28 and 18%. The brackets for other assets, it was 20 and 10%. So they were thinking of aligning those rates with the income tax thresholds of 40 and 20. So that's potentially something they'll look to do perhaps next year, once we come out of the lockdown area. Again, look to target that sort of area. Again, self-employed people, I think eventually they might get a national insurance increase. There was rumours before the pandemic that came into place about aligning that up more with employees, so they sort of the parallel in terms of what tax they pay and the rates they pay at. And obviously, with the sort of advantageous grants that self-employed people have received, I think one of these very early speeches was about, okay, self-employed people are going to get this relief, but we need to do something about your taxes that you're paying. So I wouldn't be surprised if this time next year self-employed people are targeted in terms of aligning taxes with the employees, so that they're paying. Obviously, that would be an increase for self-employed people. So potentially that might mean that people want to move on to a more direct to limited company shareholder basis if the taxes for self-employed people do get increased. And that's one area I think they might target. And they might also look to target, as well as obviously they are looking at this larger software company to try and put sort of digital tax in, and they might look to make changes to the inheritance tax. I know that's under review, and also R&D tax credits. If any businesses claim those, they are looking to change the tax credit claim available with that. I think there's going to be new limits on what you can receive. I think something I saw was about £20,000 tax credit limit plus a percentage of your PAYE liability. So if you are an R&D company who do make claims, then potentially you might have a restriction on the relief that you receive going forward. So, but we wait and see when they look to sort of bring that in.
Brilliant. Thank you so much, Mark, and your crystal ball. That's fantastic. So the question that we got in was around the bounce back loan. So just going back to that for a second. The question is there any indication as to how and when bounce back loan repayment will be enforced? Because this person's aware there's a lot of small businesses that are overstretched and that not necessarily helped, and looking to it's going to look tricky to repay. Any guidance on that?
Yeah, I think discussions about obviously they look to extend the payment terms associated with bounce back loans. I think very much so. If if it comes to the repayment point, obviously the repayments were meant to start a year from the date in which they took it out. So we are approaching that sort of area where people do have loans, so the repayments will start soon. I think it's often the case of one I spoke to the other day, their bank would say, oh, we'll get in contact with you to discuss the repayment options. So I think it's very much so it's going to be varying on the provider, but it should be a way to look to change the terms and extend it further, which might help with the repayment terms. So you might have the 5 years. I believe you can look to extend it longer than 5 years to sort of spread out the repayment and reduce the monthly repayment, especially initially, if you haven't quite picked up trade again and perhaps won't be expected to for the next few months. Hopefully you'll be able to, your provider should get in contact with you sort of ahead of when the repayments are due. And then you should be able to advise if there is anything you can do with the options of either postponing the first repayment or extending it so the monthly repayments it produces.
Right. So would you say it's recommend kind of people getting in touch with their provider
yes.
and keeping
yeah, I think some of the providers have been a bit vague with returns because a lot of the loan agreements most loans are formal structures and there's pages and pages of terms and conditions, but from what I've seen from clients providing bounce back loan details, some of them are just a couple of emails, and it's much more lax than a normal bank loan, but very much so, yeah, speak to the provider, and I'm sure there'll be a way to sort of change the terms of it to try and either do a sort of holiday on the first repayment to try and push it back there. It might, obviously, the interest, it probably will be, there won't be any more covering on the interest element from the government, but hopefully the repayments you can try and extend further.
Thanks, Mark. On the self-employed scheme and the fifth instalment, dependent on loss of turnover, will if a self-employed person has received grants before to help, will that income be included in that turnover? Because essentially they might have had grants from the government as well as that self-employed scheme, but their turnover, their traded income is not being the same.
Yeah, I think it's likely to be based on your turnover before the pandemic, because that's the only real indication of how you can see if the turnover's gone down or up. I don't believe they'll take into account any grants that have been received, because I think that's unfair to sort of hinder their claim for the fifth one if they've taken into a grant they've already received. Well, one thing I will mention with the grants, if you are a self-employed person and you do have received it, you have to make sure that that grant money you receive does get included in your tax return as taxable income. It's not, unfortunately, free money, so it's a replacement of turnover, so that needs to be included as part of the turnover that you received in your 2021 tax year, effectively. So that's something to aware of, but I think it's likely they'll base it on the year before. Obviously, if you are newly self-employed in the 1920 year, that might be slightly different, but there should be full guidance of what you base the turnover drop on. But for those who have been self-employed for a longer period, I think it will probably be based on the 1819 turnover rate.
Fantastic. Thank you very much. final question that's come in from the chat, and this is my call to you. If you do have any other questions that you want, please do write them in the chat. I'm looking at them now, and we've got a few minutes left. So one of the questions is, if you are partly employed and partly self-employed, how does HMRC deal with this? Can people claim for both? So if you're, I guess the example given is claim for the self-employed scheme and then also get furlough from your company.
Yeah, it's likely to be dependent on the sort of proportion of income you receive from yourself, from self-employed and also employees. Usually the grant will be eligible for where the majority of your income is received from self-employed. So that's probably going to be dependent on the amount you receive from your job and also through self-employed. I'm not 100% sure on what the percentage is. I think it might be over 50%, but I wouldn't, not 100% sure if that's the case of it, but that's how it will be determined. You know, part of the criteria as well is with the grants is that you're going to look to continue trading or have been trading and suffered a reduction as a result. So yeah, if it's a case of you're going to move to employment, then you shouldn't then be eligible for that claim. But yeah, for those who have sought employment as well as keep their self-employed trade going, it's a bit dependent on how much you've received from both sources.
Right, thank you. And the final question I've got, and we chatted a little bit about this before, one of the questions was around what support was there in the budget for taking on young people and getting young people into employment?
Yeah, so there was an extension. There was cash grants available that would be received if you took on an apprentice. So that's up to the ages of 24. I believe they've now increased the amount which you should receive. I believe it's going up to £4,000 cash grants, or I think it's either 3,000 or 4,000. And the scheme has been extended to 6 months, additional 6 months. So it was going to end at the end of this month. It's now been pushed to September. So if you are looking to take on a new apprentice, make sure you look to apply for the government grant scheme and get some money towards the cost of taking them on. So it would be a sort of a grant around about 3,000 or 4,000 eligible from taking them on. They have to work a minimum 30 hours, but if they're going to meet that criteria, then there should be some cash funds available.
Thank you. And we know a number of gateway organisations who have been helping local employers take on staff through the Kickstart scheme. So we can send some details about how it might benefit your business as well. There's some great local organisations supporting that. So we'll send that round as well after this session. So there have been no more questions popped in the chat, so I've not got any others for you, Mark. You can stand down. Obviously, we have another minute or so, so if there's anything that comes up, I will ask you. But I will just wrap up now and say a big thank you to you, Mark, for your expertise today. I've learnt a lot myself. There's only so much you can garner from reading all of the documents, so it's brilliant to have your expert thoughts and advice. So thank you for joining us today, Mark.
Yeah, pleasure.
And a big thank you to Coaster Capital for supporting these Q&As. We will send round details about Coaster Capital and the opportunities they have to support businesses. As we said earlier, there are a number of grants available and opportunities to find support to help your business grow. So we'll share that as well. So finally, I'd like to say that we have a number of events on the events calendar at Brighton Chamber at the moment. A number of these Q&As are ongoing. So on the 30th of March, we're going to be joined by Mark again with a colleague from Keys, a local solicitor firm, and it's all about the changes to off-payroll working, also known as IR35, which I'm having dreams about because I'm doing lots of research about it. So if you're a freelancer or a contractor or know anybody who is, then these changes could affect you. So please do come along to that Q&A at the end of March on the 30th. Daisy has just popped that detail there in the chat, so please feel free to sign up. It's free to register. We also have a your questions answered session, part of our From Brighton with Love series, which is all about support for exporting and EU transition, and that's on de-risking international trade on the 15th of March, so on Monday. You can join me at 1 o'clock for that Q&A. And one of the schemes that Brighton Chamber has been running to support businesses, either early stage or growing businesses, is Catch the Wave. It's a series that runs until July this year, one-off workshops, as I say, to help businesses, whether you're a startup or whether you've been in business for 5 years, 6 years, and you're looking to grow. So do take a look at our events calendar for details of how to join those. And I just wish you a very, very wonderful rest of Thursday. It's not Wednesday. And the sun has come out just as I'm about to leave this call and go for a run. So I feel that's good. That's very positive for me. And I hope to see you at one of these events very soon. So thank you for joining us today. Have a great day. Bye, everyone.